Hello, and welcome back to Explain the Charts. Today, March 20th, 2025, we're taking a look at USDJPY, covering both the recent news and technical chart data to develop a trading strategy. Recent news indicates that USDJPY is seeing mixed signals due to both Federal Reserve and Bank of Japan decisions. The yen is maintaining a neutral bias after these decisions. The pair has seen some downward trends since December of last year. However, recent announcements from the central banks have created some uncertainty. The Bank of Japan has decided to hold rates at 0.5%. The highest rate in 17 years, however, has shifted towards a more neutral stance due to a possible trade war. The Federal Reserve also chose to hold rates within 4.25% to 4.5% range. Trump's potential tariff policies could also slow growth and accelerate inflationary pressures. With initial jobless claims coming in at 223,000, it seems the market sentiment may be unfavorable for risk currencies as Trump is poised to introduce reciprocal tariffs on April 2nd. Now, let's dive into the charts. We'll start with the daily chart to get a broader perspective, and then narrow down to the hourly and 15-minute charts to pinpoint potential entry and exit points. Looking at the one-day chart, we can see that in the last few days the price has hovered around the 148 to 152 area and is currently around 151.40. Now, let's switch over to the one-hour chart to get a more granular perspective on the price action in recent days. Zooming in on the one-hour chart, we can observe more closely the volatility. Resistance seems to be around 149.40 to 149.60 area, and support seems to be around the 148.7 to 149 range, based on recent data. Now let's zoom in on the 15-minute chart to see smaller movements more closely. The 15-minute chart gives us even finer details about recent price fluctuations. If you plan on trading USDJPY, be aware of upcoming economic releases and central bank statements as they could induce significant volatility, particularly given the news we've covered. Key price levels to watch out for are the 148 support level and 150 resistance level. A break below 148 could signal further bearish momentum, while a sustained move above 150 might open the door for bullish gains. To recap, support seems to be around 148 and resistance appears to be around 150. So we'll need to keep our eyes on those to see if it breaks and how hard it breaks. Based on current data, I'd give a 60% chance of the price falling to 148 in the short term. However, with the right news or event, it could very easily break through to higher levels. Remember to always manage your risk, use appropriate stop-loss orders, and never trade with money you can't afford to lose. Thanks for watching Explain the Charts, and we hope to see you next time.